Well, let's drill down into all the detail and let's have a look at their asset management businesses with respect to both local and global equities. Who do you want to start with, Paul?
Let's start with Investec because there's been quite a lot of development there. So Investec kind of gets going with Stephen Kosef, the Herman brothers and all of those guys, Cantors involved at the beginning. They start out with like treasury and gold trading or something in Fox Street in Johannesburg. The asset management division starts a little bit later with Hendrik de Tooy, who is a Stellenbosch graduate. He must have finished there in about 85, 86. Smart, well-spoken guy. Him and his chums start kind of forming this business and start picking up a few mandates. They grow now, they're global. They bought Guinness Flight at some point, which is a London-based asset manager. So they are big players. They've got about R1 trillion worth of institutional and retail money under management. Fantastic job. What a business. And as I say, they've accumulated that through superior performance, solid, well-behaved sort of people in the market. So they've aggregated lots of money and it's a real money spinner today.
And Gerbrand, Investec, they're well-behaved, unlike Mr. Paul Turan here.
Yeah, look, I think it's a bit of a different cat towards Coronation. They got about 2/3 of the money that they actually manage, I think, is offshore, most UK and Europe. But certainly they've done brilliantly over time. The last 2-3 years they've certainly been outperformed by the competition on the show tonight. But I think from a global perspective they've certainly done well. They're innovative, they got the right culture within, but there is certain things that bothers us a little bit on that side as well.
We need to drill into those. We'll drill down into those things that bother you.
Equity specific now for a minute, because we'll talk in a little bit about alternative assets and bonds and that kind of thing. I mean, Investec's approach has always been a sort of value-oriented one. I think they're very well known in this country for investment managers like John Bickard, who's the Investec value fund manager. They've kind of done as well as anybody has done. They haven't really got a reputation for sort of sticking to one theme or another. They've got lots of different funds in lots of different spaces. They launch new products whenever there's an opportunity to. Sectoral focus. They're very good at the institutional marketing function, so they show up at all the pension trustees meetings and get lots of new mandates. So they're certainly relative to the old players in the industry, by which I mean Mutual and Sanlam, grew very fast over the last couple of decades. So they've been kind of rainmakers. They have lost a few people. You know, you've seen that. Pit Viljoens regarding capital management, guys that go off and do things. They're not always top of the pops. John Bickard's fund's done terribly for the last 2 or 3 years.
As have many value managers out there.
Exactly, because, you know, Stoxx people that thought were too expensive, like the retailers and industrials, have continued to do better and better.
Talk about their share incentive scheme within this asset management business.
Yeah, look, we recently had, I think, a 15% and another 5% in options. So Hendrik de Tooy and 40 other of the senior managers in that specific business is buying it at a specific price. It looks okay on net balance. I think they're buying it at pretty low earnings multiples and performance fees time in their structure, with their value funds doing not so well over the last 2 years. Some of their other mandates where Clyde Rousseau comes in has been done brilliantly, but
So
I think it's not as on a hype as what Coronation's earnings are from their fund management point of view. So I don't think it's bad, and I think it's to retain some of the employees going forward, because that's certainly one of their problems against Coronation, keeping their employees long-term wise, and that's why they lost some of their star performers. But I think they must also try to hide away from selling star performers and more selling house views like Coronation. I think is selling much better and working in cohesion with their fund.
So let's talk about Coronation now. And of course you have got people who have been there for a long time. I'm thinking here of Gavin Jabber, also thinking top 20 fund, Neville Chester.
Exactly. Those are the two current stars, plus Leinberger. I forget what his first name is.
Carl
Leinberger and Louis Stoxx.
Obviously we know the rock stars in the Coronation scope.
And I mean, some of the guys there that started that business, like Taste Toy and others, got so rich from owning shares in the business they had to retire at age 40. And the CEO of the business, Hugo Nelson, he also got too rich, so he had to retire as well.
What a terrible situation.
Terrible situation. And of course, the old boys that founded the business are so rich now, that's kind of dynastic family money that 3 generations won't be able to get through. What I would like to just point out, though, is that equity asset management can be a very good business, and a lot of performance attracts more money. So the growth in assets at Coronation has been nothing short of spectacular. They are by far the most favored house from the point of view of the brokers because they've delivered such consistent performance. So currently their alpha is good, they're beating the index, they're attracting more money.
And they can't put a foot wrong right now.
The fees are
Coronation,
going
can
through
they?
the roof. The results the other day were just spectacular.
Gerbrand, any further comment on Coronation?
Yeah, look, these things are cyclical, and their value, their specific.
I mean, every dog will have his day.
Yes, and their specific metrics has been working brilliantly over the last 4 or 5 years. They've won global equity awards for 3 of their funds, #1 rankings the last year. They've won for their balanced funds. They've won awards for their Cora Top 20 fund. They've won awards. So basically, all of their funds has won awards over the last year, and that's dated back for the last 5 years. But if you go 5 years back, we're very short-term memory as well. If you go 5 years back, they were not the flavor of the month out there. At the moment they are. I think 5 years back, Investec was probably one of the better ones. Alan Gray were looking better. So their specific model through a business cycle is very interesting. From time to time you see asset managers on top and asset managers on the bottom. As long as they stick to their philosophy over time, you probably will back them over a 10 or a 15-year period.
So who takes it here?
Look, I'm very unhappy about the deal that Hendrik and his colleagues have done with Investec from the perspective of the overall Investec shareholder. Why? Because I just didn't think it's a well-motivated transaction. I think it's excellent for Hendrik and his buddies because they're buying 15% of a highly profitable business at a price which is much lower than they would have sold the whole business for if they had been of a mind to sell it. So my point is that, in effect, I know they've been denying it ever since the deal was done, but I think there must have been some kind of gun to someone's head. In other words, they were saying, look, we're going to go away and take the business and restart it somewhere else, or we will walk out if you don't do this deal with us. I have no doubt that it would have been better for Investec, the group, to continue to own the entire